Over the last few weeks, we've been talking about this idea of a bear market rally, a bit of a push up towards $28,000 to $29,000. And yesterday, we saw just that. We saw a move actually slightly higher up towards the $30,000 range. This is obviously where we're finding upper resistance at the moment. Now, with all this going on, it's important that we reflect on who is buying, who is selling, what's going on chain, so that we can understand a little bit better about whether this move to the upside is something substantial or something that might just be exit liquidity. In this video, we're going to be jumping into the on-chain data, reviewing what's been going on with the buying and the selling, the exchanges, the liquidations, and taking a look at what we think it might mean for the price action of a BTC. As I get into the video, if you find it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, check it out, guys. Link is in the description down below. Let's make a start by jumping down into the world of Bitcoin. So we obviously do have a couple of more fair value gaps that get created here. We might talk about this if we have time, but really what we want to do is we're going to jump on over into here, and we're going to start talking about what is going on with BTC here. Okay, so this is a new reports that I've been making in the background for our new membership website, which is looking to launch in the next few weeks or so. This will basically allow members to actually have access to this data, customize date ranges, and actually look at the data on at their leisure, right? But obviously it's not live yet, so I'm going to go through everything that's going on with the on-chain data aspect of BTC. So here, this is just a big overview. We can obviously see the all-time high was 69,000 USD with 588 days since the all-time high. We're currently down 56.0167 from the all-time high. Our yearly inflation rate for Bitcoin comes in at 1.6692, daily inflation at 0.0046%. In the last 24 hours, 850 new BTC have entered into circulation. We can obviously see the fees in the last 24 hours were $851,000. There were 412,000 transactions, 920,000 active addresses out of the 48 million total accounts. Market cap 585 billion, and we're circulating supply of 19,408,587. Okay, so just general stats, if anyone is interested in that. Let's move over to the exchanges, right? Because the exchanges see some interesting things going on. So obviously, whilst I've been building this, I haven't really been talking about kind of the inflows and the outflows as often as I used to. And we have seen a big pivot here. We see a lot more exiting the exchanges. Now, I see this as a positive rather than a negative, because it means that there's going to be shocks to the supply system, right? The less Bitcoin that is available for purchase, ultimately the higher chances are that there's going to be a volatile movement to the upside in price. Okay, so it's about supply and demand, and if the supply is shrinking, as in it's not made available for purchase, then essentially as the demand potentially increases, price will shoot to the upside, or demand will be there. So getting the balance between supply and demand right basically would equal high liquidity and just sideways ranging markets. But in pockets of illiquidity, or where supply is being shocked, we tend to find volatile movements, either up or down. Okay, and at the moment we can see in the last 90 days that we've had, and the last 90 day, guys, is the 24th of the 3rd to 2023 and to the 21st of the 6th. Now we can obviously adjust this a little bit if we wanted to. If I actually go for 180 days, that takes us to the 24th, so it's a little bit too much. Let's go for where we think 173, if my math is right. No, that's 72. There we go. So from the 1st of January, we can see we've had 4.829 million going on and 4.833 million coming off. The net difference therefore remains a negative 3,674. Now, this is important because we were actually finding ourselves with more Bitcoin going onto the exchanges than it was coming off, as is noted here on this 30-day average net change on the exchanges. You can see all this red. It's red because it's above the midline, which means more Bitcoin's gone onto the exchanges, which means more supply being made available for purchase. which generally would be a bearish indication. Whereas when we go green, Bitcoin's come away from the exchanges, again shocking that supply and demand metrics. So as we can see, we were rocking actually quite high on this. We had like I think it was like 40,000 Bitcoin more on the exchanges last time I was really covering this on the YouTube channel, and now we're obviously gone the other way, right? We've got less Bitcoin on the exchanges, so we have that shock to the system. This is also noticeable on the Bitcoin total Bitcoin on exchanges, where we can see the number of Bitcoin on the exchanges actually decreasing, right? And it's been decreasing from the peak up here in April, and we can see that we've come down quite aggressively, right, back down to where we were in the February kind of time period. Now you can see the inflows and the outflows. The green is above the red, so we can see most recently that a lot more Bitcoin has been coming off the exchanges here, so the outflows are higher than the inflows. So again, you can see that that kind of has been sustainable for a period of time here, meaning that Bitcoin has been flowing away from the exchanges. People have been buying it and hodling it. Now, obviously, when it comes to this this chart, we can obviously switch between Q1 and Q2. So if we just wanted to look at Q1, you can see how the net difference here was 33,000 Bitcoin more on exchanges. And if we take a look at Q2, you can see it's 37 off the exchanges, 37,000 off the exchanges. So all in all, we know that that's the difference over the entire time period, right? 172 days from the 1st of January to the 21st of June. Okay, so that's your inflows and your outflows. Moving over into the liquidation side of things, we had $93 million of liquidations in the last 24 hours, with OKX being the highest liquidations on the exchanges. Okay, we can see that that was worth $23.14 million. All in all, 24.77% of positions were long positions that were liquidated, and 75.23% of positions were short positions that were liquidated. As you can see here, OKX is the top one, followed by Binance, and we can also see the numbers here if you don't prefer the graphic. And as you can kind of see, that somehow, even though price was moving up, some long positions were liquidated, and it was a reasonable amount, nearly 25%, right? 1/4 of liquidations were long positions, whilst price was moving up into the 30k range, which is interesting in itself. Which is probably just bad risk management and just gambling mentalities applied to the crypto market. But for the most part, as we can see, 22 million on Binance there. We can see that we had 𝗕𝗓𝗪 at 15 million and OKX at 23 million. They're the kind of the main ones to kind of call out. Other than that, you've got BitMEX, Bybit, kind of hovering around the 10 million or so, and then everything else kind of just works its way down from there. All in all, Binance is about 24.13% of liquidations, and OKX is 24.81% of liquidations. So between the two of them, almost half of all liquidations are just from two exchanges, OKX and from Binance. Let's move over into the wallet counts, okay? So unlike the previous reports that I had, we've been able to go down into more granular level detail. Okay, these granular level details are basically taking a look at wallets that have over 0.001 BTC in them, greater than 0.01 BTC in them, greater than 0.1 Bitcoin, greater than 1 Bitcoin, greater than 10 Bitcoin, greater than 100, greater than 1,000, greater than 10,000, greater than 100,000, and greater than 1 million, which obviously is a flat line because no one has 1 million Bitcoin in their wallet, apparently. So if we start right down the low end, we can basically argue that if you've got less than 10 Bitcoin, or less than 100 Bitcoin, that's probably a better way of looking at it, you're pretty much a retail investor, okay? A high net worth individual having 10 Bitcoin or 50 Bitcoin, all the way down to people owning dust of Bitcoin, right? Well, as I said earlier in our overview, there are 48 million wallets, right? So there's a lot of wallets. But if we actually kind of break that down across these spectrums, we can actually see where the majority of these of the money actually sits, right? So over this side here, with our 0.001 Bitcoin holders, there are 23 million wallets holding, dust essentially. Now that could be active, it could be inactive, but for the most part, as you can kind of see over the last 365 days, they've been kind of moving up a little bit. We see the occasional dip in places, specifically right now, but for the most part they've been accumulating. And this is the same story here for the 0.01s. Again, if we hover above this, there are 12 million wallets with have at least 0.01 Bitcoin in them. Moving over into 0.1, there are 4.3 million. And again, you can see that every time there's a big move to the downside, it's a buy the dip opportunity for these retail investors, right? Now, this might not be a huge sum of money for many, but for these particular individuals, I do believe they're the most vulnerable and the ones that are most likely to have knee-jerk reactions to price. So I suspect that if we're going to see any mass selling occurring, we're going to see it at these low levels first. Now, moving over into the one Bitcoin. As one Bitcoin, guys, was an aspiration of many people, people who really wanted to have at least one Bitcoin in their wallet in the future, and a lot of people have accomplished this. Over 1 million wallets now exist, and it's a great accomplishment, but at some point I still think these retail investors unfortunately will end up having to succumb to selling pressure just through necessity. We see a lot of things happening in the real world that are going to have an impact on the people who are holding crypto. A lot more jobs are going to be lost, okay, and we are going into recessions in many different countries around the world. Okay, inflation has kind of stalled in certain places and reversed in a few, but for the most part is still incredibly high, and it is making things very difficult. Couple this with mortgages and mortgage rates that are incredibly high, fixed term mortgage rates coming to an end, there's a need for people to downsize. Now, in such, we see a lot of larger houses, specifically in the UK, going up for sale, and a huge demand for smaller to medium-sized houses. The problem with this, obviously, is it kind of creates this pocket where larger houses are kind of being abandoned or repossessed, and there's huge demand, and obviously price pushing up in certain areas in terms of house sizing. This again is not a sustainable thing to be thinking about either, because at some point I think the housing market itself is going to have to collapse down, and there's going to be a lot of people that are going to be potentially really damaged from that one. And I think that's really where these guys are going to start feeling the pinch. Essentially, once those fixed term mortgage rates start to come to an end, people are losing their jobs. And what you're going to do, you're going to lose your house, you're going to keep food on the table for your family, or are you going to sell that one Bitcoin that you have? I think I kind of know where it's going on here. Now, essentially, I'm not looking for a huge mass sell-off where we see all of these wallets disappear. I'm looking for probably a 20 to 30% reduction in these wallets, which basically would mean 200 to 300,000 BTC approximately, based on 1 million wallets here. Okay, that still means that there's going to be a substantial amount of retail investors that still hold one Bitcoin, but there needs to be a selling off here if we want to see larger investors come on in. And it comes down to the very fundamental basics that there's always a buyer and there's always a seller, right? If in order for someone to buy, someone has to sell. And that's something that a lot of people tend to forget, but it's very important. Moving over into the 10 Bitcoin. Again, very common. You can see following the retail kind of mindset, they are still kind of looking to accumulate, kind of just going ranging sideways here. Not a lot of confidence is in the market from these guys at the moment, as you can kind of see here. Now, moving over into the traders. The traders are, in my opinion, the 100 Bitcoin or more, the professional level traders. And as you can kind of see here, they've accumulated up. They pushed all the way back down. They started to accumulate again, but they're not really terribly doing too much here. They, again, make the occasional mistake. They follow the price action. Sometimes they do some fantastic trades like they saw down in November, pushing up into the highs and then starting to sell off into that liquidity. This is something else that people tend to overlook quite a bit, which essentially is liquidity. Liquidity is where you can buy and sell without making price move too much. Okay, it's a highly liquid market if someone is able to sell something to you at the price that you want it. Okay, or more specifically, if you're able to sell an asset at the price you want to sell it for. So when price moves up quite aggressively like this, we can see that the liquidity is coming into the market, okay? Usually because there isn't a lot of selling pressure at these low points whilst there is a lot of demand coming in, right? And so when we see price moving up like this, it allows for certain individuals to use that liquidity to exit their positions. And that's where these professional traders really got this one right. They kind of either caused or created this move to the upside here in January 2023, and then they started to offload into these highs, and by the time it actually reached up into the actual high point here, you can see that they were out of their positions. This is very typical of what large investors tend to do. Okay, they sell into the move to the upside. They don't just wait for the thing to hit the high and then try to dump on the market all in one go. There's not enough liquidity to do that. They need to sell into the liquidity as the price moves to the upside. And as you can kind of see here, they've been buying liquidity on the way down. Okay, but they aren't really doing terribly too much here. Now, we do note that this would be a typical kind of area and range that we see a move to the upside in. Okay, so we can see that that break was going to happen, and we would have that move to the upside. Now, I'm still waiting at the point of recording this video for the 21st data to come on in. I haven't got that yet. That will come through in the next few hours or so, but at least you'll be able to kind of get an idea as to kind of what we saw. We saw price break out of this descending wedge here, and obviously we'll have to see how those wallets reacted to that. Did they sell into that liquidity or not? Moving over into the 1,000 Bitcoin or more, these are basically whales, and here we can see that they've been doing nothing but selling, right? They've been selling this entire time, with the occasional kind of move to the upside. Okay, and so what's really important to understand here is that either these institutional level investors, these millionaires, billionaires, are either just not interested in Bitcoin whatsoever now, and they're done with it, they're just going to move on, leave the crypto space altogether, or alternatively, they just don't think this thing's done yet and it's got further to go. I don't think there's many other options really in between. But as we can see, we saw them sell the June, July, August highs. We saw them sell the November lows, right? As a low comes in down here, they continue to sell even as price moves up. They were selling down into March, and March was the local low, right? We can see that down here at 2008 wallets. Okay, now we can see that they start to kind of just bumble around sideways. There isn't terribly too much going on there, even though prices moved up. Most recently, they have been accumulating a little bit here. There's actually currently 2,032 wallets, and you know, prices potentially pushed on up a little bit here. You can argue maybe these guys created that push to the upside, but as I said, right, everything has to be within balance. Not everyone can buy, someone has to be selling, right? And really that's where the next one comes into play. 10,000 Bitcoin or more in their wallets, and well, they've been accumulating during this bear market, as they had done in 2018, and they looked to dump it on the market afterwards. Here we can of course see that there was this move to the downside recently. So as prices broken up, these guys were selling into it, as in it was exit liquidity. They were looking at grabbing the liquidity and basically exiting their positions. Okay, so we can see that occurring within this level of 10,000 Bitcoin or more. Okay, so it doesn't look very strong. The highest that they had been was actually over at the end of 2022, and since this move to the upside here, all of this was basically just a way for grabbing liquidity out of the market. And as prices pull back down here, they're kind of just following the price action at the moment. So interesting to see how the next few days worth of data comes through on these Kraken size wallets, or the humpback whale, at 10,000 Bitcoin or more. Moving over into the micro strategies of the world. And well, here we have to see some really interesting things. Okay, so at the moment we are hovering on 4 wallets that have over 100,000 Bitcoin in them, which is a pretty meaty amount of Bitcoin. And as we can see here, these guys might be the ones who are actually deciding the fate of BTC. As we can kind of see, every time there's a kind of a major movement in Bitcoin's price, these guys have had some kind of reaction to them. And for the most part, here, they actually accumulated this initial push to the downside, and then they dumped a reasonable amount of Bitcoin on the market to bring us down here. Most recently, they've pushed it back up again. So the question becomes, are these 100,000 Bitcoin wallets actually driving this market at the moment? Are they pushing it in the direction that they want it to go into? Obviously, there's not a huge number of wallets that have over 100,000 Bitcoin in them, but obviously we can note here, when we take a look at the data, that how it is reacting, or how the wallets are in comparison to price. Are they reacting to price, or are they driving the price? I'll leave that one for you guys to decide. But for the most part here, we can see that there are pockets of selling pressure and there are pockets of buying pressure. But for the most part, the people who are holding always seem to be retail investors. And we see a lot of fluctuations, a lot more fluctuations when it comes to larger holders, such as 100,000, 10,000 or 1,000 Bitcoin or more. And for the most part, those are the guys that are, in my opinion, kind of driving the market in the directions that it's going in. And that doesn't give me confidence, not yet, not until we see good accumulation. And as I said earlier, in order for this market to be more bullish, in my opinion, we need to see big money coming in and wanting to stay in. And for that to occur, we need to see people selling. More specifically, we need to see retail investors that are currently holding sell their Bitcoin to the whale investors so that they can actually hold and take it into a bullish market. At the moment, I don't see that. Now, it's possible, of course, that we go into a bullish market with retail investors just holding. The problem that we have here is that it's easier for a small set of individuals, like a group of 2,000 people, to stick together, band together, and to hold the line than it is for 1 million people to hold the same amount of Bitcoin. Okay, you're going to have too many knee-jerk emotional responses from the retail investors that might prevent you from actually getting into that bullish market. Whereas the whale investors, the institutional investors, they don't act emotionally, they act logically, and they follow the data. And as such, you have a higher tendency to go into a bullish market when you have large investors holding out for a bullish market. So it's going to be interesting because it is technically possible that retail investors can drive this thing. I just don't think it's something that is probably going to happen. But there you go. I could obviously talk about the hodl waves a little bit here, but there aren't any major fluctuations that I can see within the data. So I think we'll probably save that for another day. Let's jump down into the chart though, right? So here we have Bitcoin on USDT pair. BitGet spot exchange as a data source, and the daily chart is where we currently sat. Now, fair value gaps have been created, to be no surprise whatsoever. Against basically, essentially what we're doing here is saying that there's been pockets of illiquidity and basically prices being able to push on up into these ranges. Again, this is nothing unusual. We'd be expecting a move to the upside. I think it was yesterday I was talking about this potential bullish flag and the potential for a break to the upside here, although I didn't expect it to go higher than the 30,959.99, which it hasn't done. And essentially we are potentially going to have to come down into these fair value gap ranges along with the lower ones as well. As you can kind of see on this daily chart, we're starting to leave more fair value gaps behind, and well, price has a tendency to want to go and fill those out. We can of course take a look at fair value gaps on the weekly. They're also on here, and there's some interesting ones way down here as well. So you can speculate as to whether or not we're going to come down deeper in the price chart into the fair value gaps, or whether we're not going to do so. Obviously, there's a lot of people that will be now talking about maybe possibly the CME gaps at 34 to 35k, just out there, possible, sure, but we'll see if we can break the 31,200 USD on the futures market before we can really kind of break out of our structure here. But all other CME gaps, other than the two that are currently shown at 34 to 35 and 20 to 21, are filled in the same way that you'd have all your other fair value gaps being filled on that weekly time frame. Just bring that up. There are no other kind of fair value gaps on the weekly time frame that have not yet been filled, etc. So for the most part, some interesting times do present themselves. I'm not bullish on the market, as you can kind of see. We're overbought on the monthly, overbought on the daily, overbought on the 20 hour, the 16 hour, the 12 hour, the 8 hour, the 4 hour. Essentially here we are looking for a pivot in the momentum, which was taking us up higher, going to trap out all those long positions, and I think this price action is going to reverse. With all that being said though, at smaller time frames, there might be a little bit more in the tank to the upside, but I'm not confident longer term other than that. So I'm going to leave this video there, guys. If you found it useful, informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.